We've just published our bi-monthly Africa review, and we're quite excited about this edition simply because we've added two new countries across the portfolio of economies that we tend to monitor, this being Cote d'Ivoire and Egypt. Why have we included them? Both these economies did fairly well, and at least they were doing fairly well when we entered the pandemic. But also, what we're finding is that coming out of this pandemic, they seem to have very strong economic structures that should drive growth, notwithstanding they've had extremely forceful and rigid response to the vaccination rollout, which is going to bode well from a humanitarian point of view. So let's start off with Cote d'Ivoire. This economy is expected to grow by anywhere between 5 to 6%. We've pegged it at about 5.8% over the course of this year, and for it to grow within these levels over the next few years. Now, supporting this growth, of course, is the structure of the economy that's geared towards its own version of a national development plan. This policy is critical, and the elections that we saw last year, from the presidential point of view, and the legislative elections that we saw earlier this year, were very key to determine whether or not the economy will be able to continue across this path of national development over the next few years, which will be supportive of growth across industries from construction to manufacturing. And so over the next few years, the economy seems to have the right tenets for growth, notwithstanding the boom that we're finding now internationally that has driven up commodity prices should be quite constructive for Cote d'Ivoire, given that 55% of its export earnings come not only from petroleum products, but as most of us are well aware, cocoa as well. Now, moving over to our other economy, which is Egypt, also exciting stuff going on in that market. We've got Neville who will be joining me in a minute to give us his views of what's going on in Egypt, Neville, over to you.
Daniel, thanks, and good seeing you again. As you rightly mentioned, we've included Egypt in our countries that we do cover quite regularly, and it was purely a function of some of the exciting stuff, as you put it, across that we've seen across in Egypt. So during the course of 2020, the economy did exceptionally well in terms of ensuring that the economy remains extremely resilient to the COVID-19 shocks that we saw. But not only in 2020, I think the reforms that we saw predate that. Over the last couple of years, we've seen a very, very strong macroeconomic agenda coming through from Egypt. And as a result, we've seen JP Morgan announce that they are putting Egypt on index watch. Now, to take a step back, what that effectively means is that they are considering putting Egyptian local currency bond index into their JP Morgan global bond index, effectively an index that puts together all the local currency denominated bonds into one particular wrapper. Now, this is particularly important for Egypt in the sense that if you've got a whole lot of asset managers that are tracking the performance of this particular index, that will ultimately mean that if they're included in about 6 months' time, that there will be significant inflows into their domestic market as investors look to replicate that index within their particular portfolio. Now, you may ask, Daniel, that what does it actually mean from a cents and dollars perspective? Now, our estimation when we wrote the note, and to our clients, please do feel free to reach out to us if you want to have a look at that particular research piece, is we are going to see anywhere between 4.5 to about $5 billion in inflows when they are actually included in this particular index. We estimate that this is going to happen during the course of 2021. So we should see some of those effects coming through over the course of this year, which of course already adds to the attractive proposition that we've seen in terms of Egypt local currency bonds. And we were putting out various recommendations on this particular trade. So this just reinforces our view that Egypt is doing exceptionally well from a financial market perspective, which is of course undergirded by what we're seeing from a macroeconomic reform perspective. So that's my spiel, Daniel.
I think it's so interesting to see the depth in which we're seeing an expansion of our financial markets across the continent. What's also quite interesting, both to note for Cote d'Ivoire and Egypt, as a lot of people might be aware, they both went through an IMF program over the past few years. And I think this has allowed both of these economies to have the correct tenets for growth moving over to the next few years. Looking at another economy, Neville, that did exit an IMF program not so long ago, and right now seems to have issued a sizable amount of Eurobonds in order to support its fiscal, is Ghana. Neville, what could you potentially tell us about the Ghanaian environment? I know you and I have spoken at nauseum about this economy, really, and just the impact that it will have across the continent. They seem to have cleaned up a lot of their operating environments. one of the first few countries to start vaccinating as well across the continent. Growth is looking good. Yes, no? Neville, over to you.
Yeah, anyone who knows me knows that I'm a Ghana bull at heart, and happy to report as you've intimated that some of the reforms that we saw again in 2020 really reinforce why we are particularly excited about the environment in Ghana, and I think that was reflected in terms of the Eurobond issuance that we saw this year, which they effectively put out across about four bonds, and that was about $3 billion in total. But what was really exciting and what really captivated the roadshow that we saw was effectively the 4-year zero coupon bond, which is effectively a first on the continent within the Eurobond, sovereign Eurobond space. And that got a lot of the streets talking around why they were doing it, how to actually price it, and the demand around that. And it's actually interesting to note that there was sizable demand across that bond. And more generally across the entire issuance, where bid to cover was close to about 2. So there was some appetite for these Ghanaian bonds, but the timing of it was actually quite interesting, Daniel, in the sense that this is at a time where U.S. Treasuries were kicking higher. Issues around U.S. inflation, U.S. growth, the fiscal stimulus plan out in the U.S. was obviously causing a few gyrations within the market. So for them to have come out this early in the calendar year to issue, and the price and the demand that we saw, I think really speaks volumes in terms of the sort of appetite that we're seeing for Ghana. And I think the hope and the promise that they effectively put out to institutional investors is that over the course of, call it 3 to 4 years, there's going to be a serious effort towards fiscal consolidation. As some of our viewers may know, the fiscal deficit in Ghana effectively blew out to about 12% of GDP during the course of 2020. And the authorities, when they released their budget, effectively say that they're going to be moving that fiscal deficit significantly lower to about 5% by about 2024, so which is the constitutional target or limit. Of course, they had to break that during the course of the pandemic, but the hope and prayer, if I can put it that way, is that they're going to be coming down to about 5% over the next couple of years. But on that point, though, in terms of sort of fiscal consolidation and what is happening from a growth perspective, perhaps I can pass the buck to you, and maybe you can talk to us a little bit in terms of what is happening from a Mozambique perspective. I mean, I personally get baffled when I look at how the currency is developing, in the context of what we're seeing from a security and sort of political perspective. Maybe give us a little bit of a color in terms of why the economy seems to be moving one way and the currency seems to be doing relatively well, Daniel.
Thanks so much, Neville. Yeah, I think it's been one of those issues during the course of the past few months that a lot of people are trying to wrap their brain around. But ironically, it's quite simple. It's economics in action. We're looking at an economy where earnings from the mining sector have started to seep in across the rest of the economy. And what I mean by this, the first few numbers that were posted across the various miners that have been making these payments, and this has added towards dollar supply across the market. So this availability of excess dollars has also meant that there has been a significant demand across the board that has subsequently been met by supply that's coming in from the miners and from other sectors of the economy. So this has bolstered what we're seeing right now from a liquidity point of view. Ergo, you've seen the metal strengthen at quite an aggressive rate over the past few months. Now, Neville, normally when this happens, you tend to have the central bank intervene. But I think they have looked at the impact of a weak metal and the impact that that has had on the inflation basket. Now, you and I both recall that towards the end of last year, early this year, we have been, sort of thinking around creating a leading indicator. Subsequently, we did for inflation in Mozambique, and that told us that this year inflation was going to hover anywhere between 5 and 6%, simply on the back of a weak metal, but combined with the fact that regionally prices were going up. I do suppose that the central bank had similar concerns. You remember that they increased interest rates by about 300 basis points, but across the narrative of the past MPCs, they've been quite adamant in stating that inflation will likely be a problem. So they're not necessarily going to have a problem with the metal appreciating to the level that it did over the past few months, because that actually anchors a lot of their inflation views, and it actually should keep inflation at bay, or at least what we estimate by towards the end of the second quarter and around the third and the fourth quarter. So again, Neville, currency appreciation really on the back of fundamentals. There's been an excess liquidity across the market, and I think this is likely going to maintain during the course of this year. What's ironic is that I had a year-end view of about $63, 63 Mexico to the dollar at the end of this year, but we've seen the currency already trading within our bullish view, which is hovering at around 55. Yeah, so unless we see a significant mop-up of this liquidity over the next few months, we're going to be working with a medical that's relatively strong, at least over the next few weeks, if not towards the end of the second quarter. So that's a very strong drive for the currency. And like you aptly stated, there seems to be a dichotomy because on the other part of the economy, we're still dealing, of course, with a lot of insurgents across the economy that's impacting some of the gas operations in that market.
So Daniel, let's switch gears a little bit, and I want to talk a little bit about Namibia. Of course, Namibia is very close to your heart, and you've just recently come back from a roadshow there, which was, of course, on the back of the budget that we saw. Maybe give us a little bit of insight in terms of, how you're marrying the numbers that are coming through from the budget, and in terms of the sort of local feel that you had, when you were traveling through there. What are you seeing on the ground, and more importantly, how do you expect the economy to perform over the course of 2021 into 2022?
So for context, Neville, Namibia entered the pandemic era in a recessionary environment already. You and I are well aware that for the past 3 to 4 years, they've struggled to ignite growth. And this has really been on the back of the fact that for several years, it was government-led growth. And in addition to that, it was growth that was mainly associated with what was going on in the mining sector. Now what we're finding is that they went through a drought period, commodity prices were somewhat suppressed. And so since 2016, give or take, they've been in a recessionary environment. And so this pandemic didn't help, to say the least. What we're finding now is that government has stuck to its laurels. So they've managed, or at least they're stating that they will consolidate, similar to the path actually that Ghana is taking. They're looking at a 5.5% budget balance at the end of the MTEP, which I think is quite aggressive considering, we saw that their budget balance also blew off to higher than, minus 9% over the past year. And it seems as if structurally they're on the right path in terms of reducing the impact of government on the rest of the economy. Here's the problem though, Neville. We're not seeing investments pick up. And this is both from a domestic point of view and also from an international point of view. We have cited this several times. Private sector credit extension has been pretty much bleak over the past few years. We're not seeing FDI pick it up into Namibia. And it seems to be the problem centered around policy and, ironically, also policy implementation and the pace in which some of these reforms should be taking place. So if there is a year when Namibia really needs to get going, if there is a year when they're really going to have a jolt in the economy, it has to be this one, Neville. I'm particularly concerned with what I saw on the ground. We've had massive job losses. A lot of people have had to take a haircut into their salary, so to speak. We're seeing a sizable unemployment amongst the youth, general sense of ennui, which is not particularly comforting. And I think everyone is on the same page. Country needs to get investments growing, in addition to export-led growth, which should then be constructive for them for growth over the next few years. If they don't, Neville, unfortunately, it's going to take them 3 to 4 years to go back to pre-pandemic levels, and then a couple of years after that to go back to levels similar to when they were growing in 2015.
Yeah. Daniel, you and I can spend the next 6 hours talking about all things Africa, but I think for now, we'll potentially stop there. And to our viewers, if you need to extend the conversation or receive any of the documents that we talked about here, please do reach out to your RMB representative and they'll reach out to you and they'll give you that information.